Snowflake stock is down over 60% year to date, and in the after hours, after reporting earnings, down another 13%. Is this one gone down enough that you can finally step in here and buy this one? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. I have the feeling we're going to be having this conversation a lot over the next 12 months. We'll have a once high-flying stock like Snowflake that just reported their earnings. We'll get into them. We'll take a look at the revenue growth, the all-important guidance for the upcoming quarter and the full year. If you've been following earnings season here on the channel, it has nothing to do with revenue in the most recent quarter. It doesn't matter if you beat. It doesn't matter about your EPS. It's all about Q2, all about Q3, all about Q4 for the vast majority of the companies, and I'll show you evidence of that when we look at Snowflake's numbers. But we're going to have this conversation a lot, I think, over the next 12 months or so, where we have a once high-flying stock like this, down over 60% just year to date, and the stock continues to get hammered from a fundamental perspective, from a technical perspective. We'll certainly look at that as well. Have these fallen back enough? Can you buy the dip? And we'll talk about it specifically when we talk about Snowflake, but you can probably apply some of the things that you learn on today's video to other stocks out there, because there's dozens of them in the same boat as Snowflake's. Now, revenue in the most recent quarter came in at $422 million, 84% growth. Look, that's fantastic. They beat expectations by $9 million, but I talked about how in the after hours, the stock's down about 13% after being up about 2.5% during the regular trade. That's because the guidance came in, like a lot of companies, a little light. Q2 expected to come in between 435 and 440. Expectations I'm seeing here were much closer to 467. I think more telling is when we stretch out for the full year over at Snowflake, expected to become about $1.9 billion or so on that annual revenue number. I'm seeing that Wall Street expected closer to about $2 billion. So now that we know what kind of the forward revenue estimate for Snowflake is going to be, probably right in that $2 billion, when the company guides to about 1.9, you'd expect them to actually come closer to 2. We still have a market cap on this one at $41 billion. You're still paying 20 times sales on this one for the next 3 or 4 quarters of revenue. So I'll let you decide, is 20 times sales still a little bit too much? When you stretch this out to a longer view, start looking out maybe to January 2030. I mean, that's 8 years away. Revenue estimates for Snowflake are right at $21 billion. Again, now you're paying about 2 times sales on a forward basis at a $44 billion market cap. So you see how far away this company is from contracting just a price to sales multiple. We didn't even talk about earnings, because when we get over to these financials, you'll see that there aren't any. So you have that $422 million worth of revenue. Again, that was 84% growth year over year. They beat expectations a little over $9 million. Fantastic growth on that top side. On top of that, you have very high margins over at this company as well, which is really, quite frankly, the reason why this company had such a large multiple and still does have a massive multiple. So you have gross profit off that 422 coming in about $274 million. You have sales and marketing expenses. You have research and development fees. You have general administrative. That means you get total operating expenses exceeding your gross profit and exceeding your revenues at $463 million. Those were up about $130 million over the previous period. That led to an operating loss of $188 million. Now, on the bright side, it has improved a little bit year over year. You were sitting at about a $205 million loss last year. That again improved just slightly to $188. But our operating expenses still outpace and exceed our revenue. I tell you what, I don't care what the name of the company is. I don't care what they do, what they sell. I personally just would not invest in a company where their expenses outpace their revenue. It's just too early, and it's too hard to tell into the future whether or not that will change in a favorable direction for you as a shareholder. You've got to learn how to draw the line at some point. But I tell you what, if some of you have been sucked into the hype on this stock and you're kind of in this one and you're kind of committed, well, okay, the balance sheet does bail you out to a certain degree. They've got plenty of cash on the balance sheet, very few liabilities from a company that just recently went public. Some of that flow down here onto the balance sheet. Everything looks pretty good from that perspective. Now, from a cash flow perspective, this is probably where you're going to see the bull case argument over at Snowflake, because all of a sudden you get to turn magically a net loss into positive cash flows of $184 million. But why do you get to do that is primarily because you had $172 million worth of stock-based compensation. We've seen this time and time again with these high multiple stocks like Square, like Plug Power, and like Snowflake. They just compensate themselves to the 10th degree over at these companies. You had $172 million worth of stock-based compensation on a company that lost $165 million. You had $172 million worth of stock-based compensation. Folks, this is not for a year. This is not for 10 years. This is not for 100 years. This is for 3 months. 3 months. They paid themselves $172 million and managed to eke out just $422 million worth of revenue off of $463 million worth of cost. It's just absolutely egregious. And quite frankly, it's gone up year over year. Last year, they were sitting at $151 million in stock-based compensation. We thought that was crazy then, and we think 172 now is just ridiculous. But guess what? On cash flows, you get to add that back in and then pump that down the throats of the stock pumpers and the people that only listen to the bull case arguments out there. And they say, well, look at cash flows. They went from 21 million last year all the way to 184. Well, yeah, you get to subtract the stock-based compensation, which chewed up a lot of expenses. And I tell you what, some of you might say, well, it is not cash. Guess what? Snowflake stock going down this much is not going, they're not going to be able to compensate their employees with stock for very much longer when it continues to do that. If you can't reward your executives and your employees with stock, you're going to have to come out of your pocket with cash. How will that impact the balance sheet? How will that impact the revenue growth in the upcoming quarters? Those are certainly things that you need to weigh if you're even think about investing in a company like this. Everything else on the cash flow statement about what you'd expect, but investors are really paying attention to these companies that don't make money, that have a still massive multiple, 20 times sales, and you have to look 8 years into the future until you get to about 2 times sales, which quite frankly, I think is less than what Amazon and Google trade for at the current time. So still, the valuation doesn't make any sense. And then from a technical perspective, it's not very complicated. This stock is in this major downtrend. It had worked its way more previously, kind of towards the top end of this range, but now, boom, we are just smack all the way back down into the bottom end of the range on Snowflake. In the after hours, you see we tank this stock all the way down here. We're going to put up a big old red candle all the way to the bottom of this range tomorrow. The good news is you are likely to have some kind of rebound off of that bottom, but you are not likely, at least in the shorter term, to supersede these highs that you made back here at 140, 150. This stock will likely, in my opinion, stay locked in this downtrend as stocks like this have completely fallen out of favor in the stock market. It's okay to sell stocks. It's okay not to have diamond hands. I know there's not a lot of influencers that have talked about taking profits, setting stop losses, getting out of stocks, but it's what every investor has to do at some point with certain investments. The other thing that we have to factor in is, yes, Snowflake could hit these targets, could hit this year-over-year revenue growth, could turn profitable at some point, and maybe we do sit here 8 years later and there's trading at a 33 times PE and about 2 times sales, but you will have to compare your holding period of this stock against a number of different stocks out there that have just completely fallen off the map, like a Facebook, like an Nvidia, like Google, like Netflix, like Tesla, even more recently. Will Snowflake, over the 8 years that we're looking into the future, will it outperform Tesla? Will it outperform even Microsoft or Google or Netflix or Amazon or Facebook? Will it outperform any of these companies and still deserve a multiple that is actually higher than where these stocks trade today? I don't think so. And that's why I'm personally avoiding this stock. If it continues to pull back at some point, the multiple into the future makes a lot more sense, but is still, even after dropping over 60% year to date and another 13% in the after hours, this stock is still wildly, I mean, we're talking absolutely out in left field, wildly overvalued. And quite frankly, you'd have to drop probably another 50% on this market cap to get us into a range where it starts to make sense when you start looking for 5-6 years out, believe it or not. If you're bullish this name, I'd love to hear your bull take down below. Clearly, the market does not agree with you, but I would like to hear your thoughts on why you continue to hold a stock like this when many other stocks in the stock market have taken an absolute beating and traded at a much, much more reasonable valuation, not only today, but also when you look out 5, 6, 10 years out into the future. Hopefully you guys enjoyed today's video. That was Snowflake. Good luck with your investments.